do a quick rundown on Treasuries, and then I'll do another video on stock markets. But I think let's just start out the curve. You can even go really far out and look at ultras. So long term, we're still in a bull market. I think the key level is going to be these lows from earlier July. If the bond market takes out these lows from July, then you got a spot here. If you put in a Bollinger Band, this is 2 standard deviations, and the bottom of the bands here it's all the same area. So on ultras it'd be 183. But if we break that, then you have the lows here from June, or most likely we're going to retest the 200. So this is the big key pivot. If we zoom in on the 4-hour, alright, it's these lows down here, 184.05. Just call it 184. Alright, the lows from a couple weeks ago was 185.07. So the market, Treasuries have been in a range trade for really just for all of this month. So I don't really expect anything probably to change until maybe the market will start to move in anticipation of September's. But until that happens, just keep it simple. We're still in a range trade, but these higher lows matter. All right, so it's the same thinking in the bond. I had so much data on the chart. 30-year, the low is 170.19. All right, no, can't be right. 169.31. 169.31 was a low from July 21st. All right, this is I'm having a hard time seeing these. $170.21. All right, so 170.21 and then 169.31. All right, same thing, range trade. So I'm pretty light, small long. Average is right around here, around 170.129. So if we get a pop up, I'll sell into the top of the range here, and if we back up today or tomorrow back into this support, all right, you can be a buyer. As far as the belly goes, if we look at fives, fives have a little bit more of a bearish tilt, and I can just see that by looking at the lower highs. But if you were to draw a regression channel here, you're going to kind of see the same thing. All right, so we're a little bit more bearish, but these higher lows, it's still the same trade. 121.08. What's my machine doing? So 121.08 breaks, then that's going to leave some room to test the June lows. All right, so in fives, that's 120.26. So you've got about half a point if we break these lows from July. But that said, I mean, any pop you've got back towards the top of the intermediate term risk range up here around 121.23, 121.25. I mean, these are all good places to sell some fives short, especially against your long. Like if you're playing long 10 years or you're playing long 30s like I am, and you're selling fives or you're selling twos, that puts you in a flattener, right? A yield curve flattener position. And since we're bullish treasuries, that's a bull flattener, since I'm long 30s. But I like to leg it around like that. Well, that's not what makes it a bull flattener, but I think that the market rallies, treasuries rally, the long end rallies, you're going to see the curve flatten more, so that would be a bullish flattener. But I like to leg in and out and trade it around the curve like that. So I take the direction longer term direction into play first, which is I like being long 30s. I have liked being long all year. It's one of the best places to be. Slow growth, no inflation, global grab for yield, etc. Blah blah blah. But the trend is just bullish, so you stay with the trend, you stay with the cycles, and but there's some cool ways that you can trade around your core position in treasuries, and you can sell fives or you can sell twos against it. So if we get any kind of pop in fives, that's something maybe I'll start to highlight in some of these videos for people. And then if we look at twos, I think the most important thing about twos is that there's a ceiling, and it has to do with the Fed wanting to, the market expectation that the Fed was going to raise, but twos just cannot get above this level up here, 109.22. I'd have to look at it on the yield chart to be specific. But you can see we've just fallen into this summer tight range. So the market's probably going to move in anticipation of the September meeting, and you would expect that the twos will probably come off here. At some point I would expect to see twos move back closer towards the bottom of the range here. But that's yet to be seen. This is the big picture sell level up here, all up in here. I don't even think you probably won't see those levels again, but who knows. And then this is the bottom of the range. If you really want to draw a nice regression here, you'll be able to see the same thing. I think this is set at 1. Let's try to change this to 2 standard deviations. Be able to see it a little better. Alright, so these are if you sold last year, you did well. You sold beginning of the year. Alright, and then this is the bottom of your big picture range. So I will probably get involved in twos if you get me to either side. Right here in the middle, there's not much to do. I'd rather trade fives around. Alright, so that's pretty much it in treasuries. I'll be back with a video on stocks.